identify the risks and do everything you can to plan around those risks.
Fraud not just being a fraud problem, but fraud also being a business problem.
If one of them isn't working right, it will have a knock-on effect on the others.
We're going to bring AI in, we're going to bring this technology in, but what does that mean and how does it play out? Hello and welcome to FeedSize podcast. Today we've got Jeny with us from PwC.
Thank you so much. Very pleased to be here. My name is Jeny Rasheva and I'm part of the Central and Eastern European financial crime team at PwC. I head up our fraud offering, supporting clients from various countries around the globe with the setup of their fraud and financial crime frameworks, anything to do from risk assessments through to technology implementations.
So you bring such a vast amount of experience with you. To your last point, talking about kind of the fraud risk frameworks and the fraud management frameworks, we see that that's such a big topic of conversation at the moment with the introduction of AI and banks really reframing how they are conducting their end-to-end fraud management investigations and their general frameworks. What would you say is the bare bones, the foundation of that work at the moment?
There's a lot going on at the moment with kind of new regulation being introduced in the area of fraud. As we know, this is quite evolutionary as fraud has traditionally been much less heavily regulated issue when compared to money laundering or sanctions, for instance. But it's not just that. There's a lot going on in terms of the evolving fraud scams, as you mentioned, kind of the use of AI and other advanced techniques. And often we see jumping into getting a new technology solution, thinking that that might solve the problem and help them to stay ahead of the game, which is often the case, that it does help to prevent a lot of the risk. But actually, to your question, that the backbone of it all is probably having a sound operating model in place before you look at the technology that you want to implement.
We really want to start with the target operating model because to that effect, that is the foundations and everything else becomes the building block. As you said, financial institutions are quick to get the innovation in, but how quickly can they really progress with that innovation if they don't have a target operating model and the relevant risk assessment and things that follow? What are the main challenges that you see in terms of financial institutions implementing these target operating models?
It's not an easy piece of work because it requires a lot of investment from financial institutions, both in terms of time, energy, money as well. These are normally big initiatives that require you to rethink the way you approach fraud risk management from an organizational perspective and governance perspective. What I sometimes see is that banks tend to jump into implementing some sort of a fancy framework that they have seen somewhere that may not necessarily be fit for purpose for their organization. It's very natural to kind of follow the fraud risk management life cycle where you try and prepare for fraud, identify the risks and do everything you can to plan around those risks and set your prevention and detection controls, but also have some mechanisms as to what would happen if fraud incidents do occur and how you deal with those and how you remediate those. So it's very logical to follow this natural life cycle rather than just implement frameworks that have been read somewhere or taken as readily available that might not suit the organization.
Within your answer, which is really comprehensive, we've talked about governance, we've talked about kind of the prevention and the detection, how we navigate the technological aspects of that as well. That covers a huge depth and a huge breadth of things across, especially when you get the bigger financial institutions. That covers multiple teams. How important is it that these teams work together and more cohesively than before?
It's very important, and this is an issue that we see a lot of the banks that we work with struggle with because traditionally fraud in the past, things are changing now, but has been seen as a responsibility of second line of defense, of whoever has fraud in their title in the risk management team, they would be responsible for kind of setting the fraud controls and sometimes executing them. And this is changing now. A lot more responsibility is being passed on to the business, as it's quite normal for them to own the fraud risks. They're closest to the clients, they understand the products best, and they need to be ready to kind of face those fraud risks and to provide that first line of defense literally against the fraudsters. So the process of setting up a fraud operating model is a great opportunity to bring in the business into this work. It's a great way to get them on board, to get them to really understand the fraud risks and to get their buy-in into actually executing a lot of the controls that are being set up. So it's very crucial for first and second line to work together on this. Obviously, second line of defense has their role in providing the needed advice and kind of supervision and oversight on the whole process. But I can't reiterate enough on how important the role of the business is in this.
I think that's a shift that we've seen kind of across the industry, with fraud not just being a fraud problem, but fraud also being a business problem. It's hitting the P&Ls. Entire product lines are focused on fraud, and we're seeing businesses bring in more of their second line, bring in more of their first line, and kind of cross-functional teams as well to understand the problem and address it kind of head on, owning the controls, as you said. What do you feel are the consequences of not having this approach?
If the fraud operating model is not fit for purpose, that will have a knock-on effect on the business itself, not just because of the fraud losses that may be connected to that, but also because of the impact on the customer experience. More and more we see this trend of business executives are being trained on fraud because they're seeing fraud as a business issue. And one reason for it is that whatever fraud controls and policies we implement, they impact the customer experience. So a consequence of them not working together would be that would be seen not just in the fraud losses, but also by the end customer potentially.
Absolutely. And then kind of to that point, and then if you embed the new shiny tool, but it doesn't work, then especially in bigger organizations, it can take years and a lot of transformation hours to then rehaul that again. So obviously you've been able to see what it's like on the front line, essentially. What would you say are your biggest takeaways from that?
It's important to consider all the elements, and that includes everything from the very beginning, from your kind of fraud strategy and defining the risks applicable to your particular products and business, through to setting your fraud processes, documenting appropriately fraud policies, procedures, obviously ensuring the adequate training is provided to employees, that your customers are provided with adequate fraud awareness. That's a very hot topic now. We've got the PSD3 coming and so on. So an important element to look at. Technology, it's a huge topic, probably not for our discussion today, but important to consider this together with your fraud incident response plan and how you remediate controls and systems when things don't go to plan. So once all the elements are considered, a key thing for me is to actually look at the interconnectedness of all of these elements, because they are important by themselves, but if one of them isn't working right, it will have a knock-on effect on the others. I'll take the risk assessment as an example. It's often seen as a bit of a tick box exercise, but it's so key because the output of it then goes into a lot of the other components of the operating model.
And I think that's the important thing to understand and to remember, that things don't always go to plan. And obviously having the risk assessment not being a tick box exercise, making sure that you have your mind around the global estate of what you're doing and what that looks like. It's so important, because it's easy to talk about, we're going to bring AI in, we're going to bring this technology in, but what does that mean and how does it play out? We've seen so many projects in different banks and different financial institutions, and even outside of the industry. You get to the end goal and you realize you haven't done the governance. Something does go wrong, and then you feel the effects of that. You make the front page of the news for whatever reason. In terms of where you think banks will be placing the most emphasis. Where do you see that going? Do you see it continuing in target operating models? How do we see that evolving?
It's hard to say that there's necessarily a trend of which part of the operating model would be more important, because this is very specific to the organization. But if I had to choose kind of an area, I'd definitely go for technology, the obvious elephant in the room. But with how fraud is evolving and how dynamic it is, we need to have a dynamic response. And so technology will play a huge role in actually helping banks tackle these new challenges. Like, we're talking about really sophisticated scams, deepfake. Like, it's very hard to spot. And that's not just the vulnerable customers at banks. That's the traditional, well-educated person that may fall for these scams. So they need to have advanced solutions to deal with that. But as I mentioned earlier, all this goes hand in hand with the governance and processes around it. I have unfortunately seen cases of banks where they've had the most advanced kind of technology solutions in place to catch various frauds, but because of the way they had set their processes to respond during times of accidents, the way they were handling alerts from the transaction monitoring system, the way operationally they were kind of configuring the system, they couldn't respond adequately during incidents and had lost money on the back of it, not because of technology, because of the processes and the people in the background. So for me, yeah, technology will be the area of focus, but that doesn't mean that the rest of the components of the fraud framework won't need to keep up with that.
And that's amazing insight. And again, one of the things that we don't hear enough about is everything that happens downstream. So we've got the technical integration, we've got the product in place. What then goes on in the alert handling? What then goes on in the queues? And how do we actually impact the customers and the consumers on the other end of this? Thank you so much for your time, Jeny.
It's been a pleasure. Thank you so much.